And so the fact that they even have to print $4.5 trillion just because of a short-term crisis, COVID, shows how little they're getting now. And the fact that the markets are down this much, like you say, they're resilient. They're resilient for good reason. All this printed money, they didn't send checks. No, they're just basically buying bonds and financial securities to the markets, which means more money, new money, not coming out of consumers and the economy and businesses, created by the government, that's going directly into buying financial assets. And it starts, the government buys bonds, but then those people sell the bonds and they trade up the higher yield bonds and then the stocks. And so it goes all in, all financial securities go up. And the biggest beneficiary for this type of stimulus is always the stock market, real estate too, all financial assets. But the stock market does the best. So the stock market is resilient. And that's why I'm telling what we need here is for the markets to go down enough to break the confidence that has been created. People have to realize since 2007, and I called that one 20 years before it happened, late 2007, baby boomers peaked in their spending. We had a peak in the stock market in late 2007, and we went into the first deep recession since the early 80s and the early 30s, okay, the Great Depression. And that's when the Federal Reserve and central bank just went nuts. We have printed more money in the last year and a half or so than all of the printing before this, and even, since 2008 and 9. I mean, just years and years of this. So they keep doing exponentially more. So they're just desperately keeping this bubble going. And when you get in this phase, there's no way to say, oh, it's going to happen this day or this month. I mean, I was able to predict the 2007 top because I could precisely determine within several months when the baby boomer is going to peak and momentum was going to turn down. But this is just, a bubble's going to go until it bursts. I'm now looking literally at chart patterns and things like that to see when this bubble looks like it's going to pop. And this looks like one of the times right here in December where it could top. If not that, it'll be early next year. After that, I'm going to be shocked if we do not see a downturn. So it's at the point where, to me, this is such an extreme bubble. If you're hanging in there, to say, well, maybe it goes another 3 or 4 or 5 months. I'm like, get out. What my research does show 100% is that when a bubble like this bursts, you're going to see 40 to 50% crash in the first 2.5 months. And if you sit and wait for that, it'll happen before you're ready. And then you'll panic when that happens, and then it'll bounce and then you'll look like a double hit. This is the hardest damn thing a person can possibly do, is fight a bubble, which every central bank is so committed to keep going that they will print $5 trillion. Yeah, $5 trillion has been printed just since COVID by the Federal Reserve. That's what I'm fighting. But I'm telling you, if you think and keep printing exponentially more money and keep a bubble going forever, then you have not studied history and you're the one. So I'm standing by my forecast. Yes, I'd rather be early than late. What did I just say? First crash could be as high as 55% in 2 to 3 months. That's what we're looking at. You want another 5%, 10%? Maybe I'm early, fine. If you risk that and you're wrong, you could be down 50% before you know. My biggest issue right now, when I study bubbles and how they burst, the biggest surprise that most people know little about, the first crash after a bubble is typically 46% in 2.3 months. And so we may be, I'm tracking this downturn right now since January 4th, the final top in the S&P 500 after a lot of other indices top. And basically, if this is correct, we could be down 40% or more by the end of March. If we don't see this, we're probably going to make one more run at new highs. And I think if that's the case, you'll only see a new high in the S&P 500, probably not the NASDAQ, certainly not the small caps, Russell 2000, and many other markets. And that'll be a final top in confirmation. But I'd say the odds are we've already seen a top. But I'm telling you, when these things finally go after going up and up and up, it's very brutal. What's happened uniquely here, the markets did peak in late 2007, as I've been warning for a long time, when baby boomers were peaking in their spending curve all the way from 1983 to 2007. That is when people keep hitting age 46 to peak spending in higher numbers. And what happened in that crash in 2008 and 9 is the central banks panicked and they just said, well, we can't have a depression. And that's what it looked like. And that's what it would be like after such a boom, just like the roaring 20s depression. And so they've been printing money ever since. And then when they hit COVID, they printed more money in the last year and a half or two than they printed in the 10 years before that. So we're in this basically confrontation between central banks desperately printing ever more money to keep us from shaking out the greatest bubble, financial assets in history, the greatest debt bubble in history, and now global, more than any time in history. We printed $4.5 trillion, probably going on 4.6 or 7 now, just in the last 2 years. I mean, this is an incredible jolt. Yes, you can keep stimulating and they can keep doing it more and more, which they are, but it is diminishing returns. The signs are recently, what we've seen is we've seen one index from the corporate bonds to then the small caps and Bitcoin, and then the NASDAQ peaked in November 22nd, and it looks to me like the S&P could have peaked basically yesterday. So we see the succession of peaks down into narrower, more large cap. That's a classic long-term top. That's why I'm saying it's likely now, but there is no way to tell this until it happens. But I am warning you with unbelievable analysis in history of every bubble, major bubble in the last 150 years, that first crash will be 40 to 55% so fast you will not see it. So if you wait to see if I'm right and take that risk, you are going to be hit very, very hard. And history is very clear about that. No exceptions.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.